Alright y'all, in this video I want to give you a systematic approach to creating a winning Market Cipher strategy. Because if you're new to Market Cipher, or maybe you don't even have Market Cipher yet, it can be very overwhelming. I remember when I first got Market Cipher, I understood I had this amazing tool at my disposal, but there were just so many options. I had so many questions. What time frame should I look at? First, I was looking at a lower time frame, and I felt like if I found a good entry on a lower time frame, then a higher time frame would make it a bad entry, and vice versa. And I just felt so lost and so overwhelmed. And so in this video, I want to kind of distill all these things down into a systematic approach that you can create for yourself, for your own lifestyle, to have your own strategy that you can test for yourself and then put it into action and start winning. So I'm going to go over the steps. There's 8 things you need to do. And I'm going to go over them all first, and then I'm going to break each one down. So the first thing you need to do is you need to decide what kind of trader you want to be. Are you going to be a scalper? Are you going to be primarily looking at lower time frames? Are you going to be a day trader, where maybe you're making 1 to 2, 3 trades a day, and you're looking at medium time frames, maybe the 30-minute to 2-hour time frame? Are you going to be a swing trader, where you're looking at larger time frames, maybe the 6-hour, maybe the 8-hour, or maybe a long-term investor where you're looking at the daily or the weekly time frames, and you're buying when you get your confirmations and then selling at the top to take profits? Or are you going to be a combination of these things? Now, this is something that CryptoFace talks about a lot, why you need to have multiple accounts. Because if you're going to be swing trading and scalping, you need to have separate ByBit accounts in order to make that more successful. So this is the first thing you need to do before you even start trading, is decide on these things. The second thing, decide on what time frames you want to use. Even if you're scalping or day trading, you need to set for yourself different time frames that you are always going to look at in order to enter and exit a trade. The reason for this is because if you are all over the place and you're going from the 4-hour to the 1 minute to the 1 hour to the 30-minute to the 7-minute, you are not going to be able to keep your thoughts organized enough to enter and exit good trades. You need to decide what time frame you are going to use to identify your environment. This will be a larger time frame right here. And then you are going to decide what time frame you are going to use to execute your trades. This is going to be a smaller time frame. And just a little quick caveat here, guys. This is what has worked for me. I'm not saying this is the definitive guide here. This is what has helped me organize my thoughts and create a strategy that works. Okay, and if you want to know the strategy I'm currently using, you can go watch that video. It'll be in the link in the description of this video to see my strategy. But this is the blueprint that I use to create my strategy, that I'm using to create other strategies, and you can use to create your own strategy. So after you decide what your time frames will be, and I'm going to go deeper into all this, you're going to decide what your confirmations will be. You are going to have confirmations that will tell you to enter a trade. And you do not enter a trade unless all your confirmations confirm. And then you are going to have some form of confirmations that will let you exit a trade. Now, this can be different for everybody, but you need to have these things. Now, the 4th step is backtest. Once you have this plan in order, you know what kind of trades you're going to be doing, you know what time frames you're going to use, you know what your confirmations will be. You need to go and backtest this thoroughly. You need to go onto TradingView, and I'll walk you through this, but you are either going to look at the charts and just kind of measure what your profit or loss would have been, or even better, use replay mode in TradingView. Go back in time, literally go back in time, like this. Oh, for some reason it didn't work for me right now. I'll get to that later in the video. You're going to go back in time, and you are actually going to backtest as if you were live trading. Now, the 5th step to creating a winning Market Cipher strategy, and this is very important, is stick to your plan. It is so tempting to not stick to your plan, and here's why. if you have a strategy that you have back tested and you know it works and you've seen it work and you've experienced the gains from it, but then you're looking at the charts and all of a sudden Bitcoin's starting to pump and you don't want to miss out, but your strategy has not given you your confirmations. Now, I understand that more experienced traders are more fluid and they can have multiple strategies and they can go in and out. But if you're starting out and you have a plan that you know that works, do not FOMO into a trade if it goes against your plan, because things will probably not work out in your favor. You need to make sure that you are sticking to your plan. Here's why. You put in the work, you put in the back testing, you put in the strategy making, and now you're going to screw yourself over by going against everything that you just did. So it's okay to have multiple strategies that you could use at different times. If you see a certain price action movement happening, maybe you can switch to a different strategy you created to enter into that trade. But if you have a strategy, do not deviate from that strategy. Now, the sixth step is set alerts. This is very important to set alerts. The reason for that is because it's so easy to miss the move. And I've done it, okay? I've done it where I'm actually at the computer and I think, oh, I don't need to set an alert. I'll just check the chart every few minutes. You end up doing something, you check the chart and you realize I missed my entry. And then you have to make that decision, oh, should I FOMO in and miss half the move, or maybe the move's already over? You need to set alerts, because if you want to get in the trade at the time that you planned, you need to do that right when your things confirm. Now, the seventh step, keep expanding and experimenting. This is just a blueprint to help you get started. Just because you have a strategy that's working for you doesn't mean it's the best strategy. It's definitely not. I mean, how many traders are out there in the world, and how many traders are better than you? Probably an infinite number. I mean, look at CryptoFace. He makes more in one trade than most people make in a year. It's crazy. There are awesome traders out there, guys. This is a skill that constantly needs to be refined. And it's not just on the charting aspect, it's also on the ByBit aspect, or whatever exchange you're using, understanding how to dollar cost average in, understanding when to take profits, understanding where to set a stop loss, the psychology of it. Keep experimenting, keep expanding. And finally, the last step is watch CryptoFace's live streams, because here's the thing about CryptoFace. He does not usually sit down, except for his original tutorial videos, which, by the way, if you have not watched, you need to go watch those at least twice, because that will give you the foundation that you need to then build a strategy based on what I'm telling you. But besides his 3 intro tutorial videos and maybe one more video out there, he doesn't sit down and teach you Market Cipher. Instead, he does what he does. He just live streams his trades. And they're long, right? They could be like 5 hours, sometimes like 7 hours. But here's the thing. In that time, he drops these little golden tidbits and shows you little things that he does. And even if you don't get to watch all the live stream, even if you don't get to watch every live stream, just by watching that content, you are going to gain knowledge on how a Market Cipher expert uses the tool that he created. So this is CryptoFace's indicator. So we need to get inside his mind as much as possible, because this is the outward expression of what is in his brain, this indicator, right? So if we can understand it from his perspective, we're going to have more success. Okay, so let's break this down. Decide what kind of trader you want to be. This is important because when people first open up Market Cipher, and especially if people are new to trading, they're totally lost. They're totally lost. They want to make money right away. So a lot of times people start on the smaller time frames, maybe the 1 minute or the 5 minute. They just want to win trades and feel like they're doing something. And then a lot of times when people lose little scalps, then they're like, oh, maybe I should do it on the 1 hour time frame. And then they're all over the place. What you need to do is you need to think about your lifestyle. If you are somebody who has no job and you're looking to do this full time, then yeah, I would focus on scalping or day trading, those smaller term trades where you can make those profits that add up throughout the day. But if you're somebody like me, okay, I own an SEO company. I have lots of animals and property to take care of. I have a family. I have other hobbies that I like. I cannot spend all day looking at the charts. I just can't do it. So I consider myself more of a swing trader or even a long-term investor, where if I'm entering a trade, I'm going to be in that trade for probably at least 12 hours, maybe even longer. I've been in trades, swing trades for, 3 days, 4 days. And then I'm a long-term investor. I will use the daily time frame in Market Cipher and buy when I see a good entry and just hold that until we reach like a new all-time high, and then I'll sell a little bit and buy back in at a lower price. Okay, you need to determine what your lifestyle can support. If you have a full-time job, you can't be a scalper, because here's one thing you don't want to do. You do not want to you don't want to trade with half your brain. You don't want to be at work on your phone on ByBit entering trades, willy-nilly, to use that term, willy-nilly, willy-nilly. You don't want to be doing that, because you're not actually going to be able to sit down and see all your confirmations, and you're going to miss something. So if you have a full-time job, look to do a swing trades, long-term investments, or a combination. And this is what most people do. This is what CryptoFace recommends, where you have multiple ByBit accounts, and you are going to then have one account that's for swing trades and long-term trades, and another account that is for scalps and day trades, where if you have the time, maybe a day off of work, and you can trade all day, then you would scalp and day trade on that account. So you need to decide what you are going to do, because if you don't, then you are not going to be able to come up with a good strategy. Now, the second thing is decide what time frames you're going to use. Now, I have found it best to use 2 time frames, primarily 2 time frames. You can use more, but the strategy is going to be based primarily on 2 time frames. You're going to have an environmental time frame and an execution time frame. The environmental time frame is the time frame on which you are going to assess and identify your environment. And now CryptoFace always talks about this. He talks about you need to identify your environment. And the way you do that is you need to look on a macro scale on what is happening on a macro scale. Let me put up the Bitcoin charts here. Because what happens on the lower time frames is really just a microcosm of what is happening on the higher time frames. Now, when you're looking at your environmental time frame, right here as an example, I have the 4-hour time frame and the 24-minute time frame. And in the strategy that I showed you in my strategy video, which is in the description of this video, these are the 2 time frames that I use. And if I'm looking to trade, I'm going to come onto the larger time frame and identify a few things. Are we in a upward trend, or are we in a downward trend? What is the money flow like right now? Are we thick in the green, or are we deep in the red? These things are going to determine what kinds of trades I enter or do not enter on the smaller time frame. So for me, if I'm looking at the larger time frame, in my case the 4-hour and the 24-minute, but maybe you do the 1-hour and the 3-minute, or maybe you do the 1 day and the 4-hour. Okay, you can experiment with this. But the first thing I do is I come over to the 4-hour. I say, okay, what is Market Cipher B telling me? Right now, it's telling me we're in an uptrend. It's also telling me it looks like we're nearing the end of this uptrend. We might be heading down into a bearish retracement. The money flow index, it looks like it's in the green, but it also looks like it's starting to curve down a little bit into the red. So these are the things I am going to look at before I decide what I am going to do on the 24-minute. Now, according to my strategy, what I'm looking for on the 4-hour is I'm looking for a green trigger wave. Okay, I'm not just looking for a green dot. I'm looking for a trigger wave, meaning there's already been a larger wave in the past, and I'm watching as the momentum is moving upwards in the direction that I want. And we can clearly see by looking at Market Cipher B that for the past few weeks, the upward momentum has continued to print higher lows on these trigger waves, we had a big anchor wave over here on January 21st, and since then we have been getting these trigger waves, and each trigger wave has been pushing the momentum upward and the price has been going higher. So the first thing I would be looking for is a trigger wave signified by a green dot, and then I am also looking to see that the Wolfpack indicator, this is an indicator I talk about in my other video, I'm looking to see that the Wolfpack indicator has just crossed from below the zero line to above the zero line and has changed color. Now, this Wolfpack ID is an indicator that I use as a secondary confirmation, and it's very helpful. Let me change it a little bit so that you guys can see it better, because I know it can be kind of hard to see. So I've been using this as a secondary confirmation. It's actually really good at keeping you out of bad trades. But so I get my confirmations on the larger time frame, my green trigger wave and the Wolfpack ID indicator crossing from under the zero line to above the zero line and changing color. Once I have those confirmations on the 4-hour, I am then looking for an entry on the 24-minute because I have identified my environment. Now I'm moving to my execution time frame. Now let's take, for example, this trade right here on February 11th, 2021, right here. I got a green trigger wave on the 4-hour. Okay? The Wolfpack ID had crossed over. It was red, now it's green. It has crossed over that zero line. So now on my, let's see where we're at, February 11th. So now on my 24-minute chart, here I am. What I'm looking for now is basically the same thing, but on the 24-minute chart. Let me pull up the Wolfpack ID indicator here. Wolfpack ID. I am now looking for a trigger wave on the 24-minute. So I got the, you can see where it lines up, my cursor over here, and how the dotted line is over on the 24-minute in the same place on a different time frame. If you look closely, you can see that. So once I got this 4-hour confirmation, I actually was printing, at the same time as I was printing a green trigger wave on the 4-hour, I was printing a red momentum wave crossover on the 24-minute. It's not until a few minutes later that I had two things happen. I had the Wolfpack cross above the zero line and change color, and I had a green trigger wave on the 24-minute chart. This is where I would have entered my trade. This is my execution time frame. I did enter this trade, and I entered right here on this green trigger wave and rode this thing up for a while. And I think I was in it for a while, and I realized that the price was just kind of sideways trading, so I got out somewhere. I probably ended up with like an 8% gain from this trade. So that's how you are going to use your two time frames to create your basic strategy. Now, the next thing you need to do is decide what your confirmations will be. Now for me, I already went over this. I have 4 confirmations: a trigger wave on the 4-hour, a Wolfpack crossover on the 4-hour, and then a trigger wave on the 24-minute, a Wolfpack crossover on the 24-minute, and there's one more confirmation I have actually that I didn't talk about, and that's a clear direction of the money flow index. If I'm looking to long, it's very important that I see that the money flow index is in the red on my execution time frame. I would not enter a long if my money flow index is already in the green on my execution time frame. I want it to be green on my environmental time frame because I know money's coming in on a macro scale. But on a micro scale, I want to know that money has been coming out for a while and now it's primed for money to come back in. So I'm looking for this curvature here, and that's exactly what I see. So I have those 5 confirmations. You need to determine what things have to happen in order for you to enter a trade. And if all of those things don't happen, you do not enter a trade. This is very important. Now you need to have your entry indicators and your exit indicators. For me, I have 5 entry indicators. Now, I'm struggling to find exit indicators that work every time. You're going to run into a problem where you're either going to leave profit off on the table when you could have had it, or possibly even you are going to turn a very high winning trade into a very low winning trade, or possibly even a loss. So you need to come up with a system, and the system that I use is this. And obviously everyone has their own system, but if I am in a trade, and let's say I'm in a trade and I entered right here and it goes up maybe like 2%, 3%, what I will do is I will move my stop loss. Let's say I had a stop loss right here when I first entered the trade. If I go up 3%, what I'm going to do is I'm going to move my stop loss into take profit. So worst case scenario, I exit that trade in the green. Worst case scenario, I exit that trade in the green, okay? So I know I'm not going to lose the trade because a small win is much better than a loss. And then what I do is I will set take profits in ByBit at different levels. I will set maybe 25% of my initial contracts I'll sell here. And then maybe another 25%, I'll just set them in ByBit here. And then I'll set another take profit maybe up here. And here's the thing. Because my stop loss is right here, let me mark this out for you that this is the stop loss. Because my stop loss is right here, it means even if I don't hit all three take profits, I'm still going to be ahead in this trade because the lowest it can go is still in profit. So if I hit my first take profit and then I hit my second take profit and I'm just accumulating these profits and then I come up, I just missed my third take profit and it comes all the way down and hits my stop loss. Well, that's still a really good trade. This is how I'm doing it for now. Now, you can come up with your own, maybe you see something in Market Cipher, or maybe you have the time to really look at Market Cipher all day and say, okay, I see on the lower time frames they're starting to lose momentum, but it's very important that you have your entries and your exits planned out. And now the fourth step is to backtest. This is so important because this will prove to you that your strategy works, okay? If you know that your strategy works, historically, then you can have more confidence entering into trades. And you won't be freaking out as much if you enter into a trade and it's moving sideways or it goes down a little bit. You can say, okay, look, I know my strategy works. I understand I'm not going to win every single trade. There are some losses. But I also understand that I have backtested this strategy to know that I'm going to win more trades than I'm going to lose. So if this hits my stop loss, no worries, because the next trade I'll make some good money. Here's how you're going to backtest, okay? You are going to use replay mode in TradingView. It's right up here, bar replay. And let's see here. I'm gonna use it on the 4-hour. Right here. Okay. Now I need to come into the 24-minute as well. Now the problem is with backtesting is you can only do it on, you know, one chart at a time. Like I can't, just because I'm using the replay mode, it's only going to replay on the 4-hour, which is fine because technically you don't need to use replay mode, but it helps because then you can set, you know, a stop loss and a take profit and literally watch it happen in real time. So this is how you would backtest. And as you're backtesting, keep track of how many wins versus how many losses your strategy has. Keep it in an Excel sheet or even just a notepad like this. Have one column for wins, one column for losses. Go back. The farther back, the better. I mean, I like to test my strategies. Obviously, right now we're in a bull market, right? So we're seeing Bitcoin do crazy things. But in 2019, 2018, we were in a bear market, you know, early, 2020, some crazy things have been happening. But there were times where the Bitcoin price, might move like 3% in a week or more. So you need to test this during, times when the market is stagnant, times when the market is bearish, and see how is this plan going to work in different market conditions. So I'm going to come over here and I'm going to be looking for my confirmations. So let's play one bar at a time here. And what am I waiting for on the 4-hour? I'm waiting for a green trigger wave. So I had a red dot here. It's coming down. I'm just waiting. I'm waiting. All right, playing it out. Playing it out. Boom. We got a green trigger wave right here. And I also got a Wolfpack crossover right here. So this is my signal that, okay, I'm looking for an entry from my environmental time frame. I'm going to move over to my execution time frame and look for an entry. And I printed that green dot right there on the 4 hour. So right here on the 24 minute, this is where I would enter my trade because I have all my confirmations. I have a trigger wave on the 24 minute. I have a Wolfpack ID crossover right here coming up into the green, and then I also have my money flow index curving upwards, a clear curve upwards. In fact, right on this dot here, you can see it pretty much crossed over. So I would have entered right here, or maybe a better entry would have been right here because actually the Wolfpack ID, if you look closely, I don't know if you can see it, but it hadn't officially crossed over here. So I would have entered right here. So let's do that. Let's put a long position here in market in trading view, and I probably would have set my stop loss, below the last swing low, just to be safe. Obviously, you can do what you want depending on your risk management. This is a 5% stop loss that could be very significant if you are trading with your whole account. If you're trading with 25% of your account, 5% stop loss is pretty good risk management. And then, I usually just set my take profit kind of high when I'm using Market Cipher because, like I said, I exit out. So let's maybe set some take profits here. Set a take profit there. Set one here. Set one here. Set one here. Set one right here. These are kind of close together. Let's maybe spread them out a little bit. Okay, so let's play this out and see what happens. Okay, obviously I'm on the 4 hour right here, and we know what's going to happen, but it's so that you can see it and see how it would work. So here we go. Wow, boom, I just hit 3 of my take profits with one 4 hour candlestick. Thank you, Elon. And then, I'm still in the trade here. Boom, I just hit all my take profits. Now, it's always good that you don't keep all your, I would never, even though I set all these take profits, I would never have them be all of my account. I'd always let a little bit ride, just in case. So now that I'm way up here, I'm going to obviously move this stop loss into take profit. So this stop loss now is into take profit. So even if it were to just crash down right here, I wouldn't be in the negative at all. And then let's just see what else happens here. Okay, so obviously we printed a red dot up here on the 4 hour, and then later on over here we crossed under. So I probably would have exited this trade right here. That's just me. That's just the way I would do it. But this is how you're going to backtest. And you are going to do this, and you're going to go back in time, and you're going to find every single instance where your criteria is met, where you... Here, let's exit out of replay mode right now. And of course, you don't need replay mode. You can just look at the chart and basically see, okay, look, I had my confirmation right here, and I entered here. Whoop, wow, look at that. Okay, that one worked. Then go to the next time it happens. Right over here. Okay, I entered right here, and whoop, there goes the price. Okay, that works. The reason I like replay mode is because it lets you feel more like you're in a real trade, where you're, obviously there's not real money on the line, but you feel like you're in a real trade. You're watching the candles move, and it's more legit. Let's just put it that way. Okay. Number 5, stick to your plan. This is very important. I went over it a little bit. The bottom line is you put in all this work, okay? I want to talk about something that happened to me yesterday, okay? There was a green trigger wave that printed on the 4 hour. I had been waiting. I had been waiting for this trigger wave to print. When did it print? Printed right here on the 15th of February. Okay. It printed, and I really wanted to enter a trade because look, the price actually did move up after this. So if I had entered this trade, it eventually would have been good for me. Here's the problem. I didn't have all my confirmations on the 24-minute because when this green dot printed on the 4-hour, I didn't have I didn't have a good entry on the 24-minute because let's see, I wasn't using Heikin-Ashi candles, which actually does make a difference, guys. It does make a difference. The Heikin-Ashi candles really do make a difference. And maybe I should have been using Heikin-Ashi candles because now I see that actually would have been a good entry actually if I had been using Heikin-Ashi candles. So let this be a lesson to everybody. Heikin-Ashi candles will change the way Market Cipher B prints. Because when I got this green dot right here on the 4-hour, I had already missed a green dot entry on the 24-minute, and my next green dot would have been right here, but my Wolfpack ID had not crossed over from the zero line. It was actually heading on its way down. And another thing is that the money flow index was already in the blue on the 24-minute. So there were some of my rules that were not met for this trade. So I did take the trade. I FOMO'd in and I immediately got out because I said, no, I'm not going to screw myself. I'm going to stick to my rules. And actually, it's a good thing I did because, you know, I had entered here for a minute and price just started to plummet. And that's when I'm like, okay, I didn't stick to my rules. Because I didn't stick to my rules, price plummeted. As I backtest my strategy, price never plummets if everything is right. Okay, so far, I have never had price just to go zoop down when everything is met. So you need to stick to your rules. Don't screw yourself out of all the hard work that you have done in the past to develop your winning strategy. Set alerts. This is important. Okay, if you're not watching the computer all day, you need to set alerts. And here's how you're going to do that. You're going to go into TradingView. You are going to click Market Cipher B or any indicator you're using. And then you're going to right-click it. After it's highlighted, you're going to right-click it. And then you're going to click Add Alert on Market Cipher B. And here you're going to be able to add any alert you want, like a small red dot. Always click once per bar close because this will give you a notification after the candle has already confirmed. You don't want to enter into a green dot that's going to unprint. Okay? It's not officially a green dot until that candle closes. So once per bar close, and then notify on app, show a pop-up on your screen, send an email. Make sure you get this notification on your cell phone if you're not by your computer. You can also do the VWAP crossover by doing Market Cipher B and then have the crossing, and now you're going to do Market Cipher B VWAP crossing the Market Cipher B zero line, and every time that VWAP crosses up or down, you'll get a notification, and then you're just going to create that notification. Every time it happens, if you're on your computer, you'll get a pop-up. If you're on your cell phone, you'll get a text message. You have to have the TradingView app, though. I highly recommend that. Very important. Number 7, keep experimenting and expanding. This strategy that I developed for myself, obviously, I use all the tools at my disposal, live streams, other people talking about how they use Market Cipher, etc. This strategy that you create is not perfect, and it never will be. So never take off the table expanding your strategy, making it better, refining it, backtesting more, taking your strategy and maybe scaling it up or down. Like the strategy that I use, a lot of people have recommended to me, hey, why don't you scale this thing down and use like the 1 hour and the 3 minute, or scale it up. Maybe use the 8 hour and the 2 hour or something like that. Find out what works. Maybe you can find out a way to use 3 or 4 time frames, and you have it down to a system so that you don't feel overwhelmed, where you're using maybe the 4 hour, the 2 hour, the 24-minute, and the 15-minute, where you're looking at things from a wider perspective. These are things I'm experimenting with right now. Man, look at this Bitcoin pump. Oh, I should get in a trade right now, right? It's going up to 60K. Oh, it's coming back down a little. Don't ever stop expanding. Now, Market Cipher is such an amazing tool. It will really help. It will really help. And if you can create a winning strategy, it will change your trading life. Seriously, it will change your trading life. Now, if you don't have Market Cipher and you want Market Cipher, click the link in the description of this video. It will help out my channel if you use my affiliate link. Just to have full transparency, it will help me out. But I would really appreciate it if you would use my link, because it would help me grow this channel and buy more equipment. I don't really have anything right now to make videos except a MacBook and some headphones. So I would really appreciate that. And if you're new to Market Cipher, then I encourage you, come up with a strategy. Don't be lost in the dark. Come up with something, put in the work, put in the time, and it will pay off in the future. Alright guys, that's it for this video, and I will talk to you in the next one.